Hey everybody. Morning. How's it going? How's it going? Everything's fine, right? The market's everything's fine. Fine. No big deal. No big deal. So, you know, it's I don't know. I mean, we're all financial optimists, right? We want the market to go up. Can it go up forever? You know, not really. Not really. I mean, eventually this whole thing runs out. And our beloved stock market is currently performing some impressive gymnastics that would make Olympic athletes kind of jealous. I mean, we're seeing the Buffett indicator. If you didn't know what this is, that's GDP compared to the prices and output of stocks. And right now we hit 217% of GDP on the stock value. Anything over 200, Buffett has, for basically his entire investing career, said that anything over 200 is ripe for a large market pullback. We're at 217%. Makes total sense, right? Everything's great. Everything's fine. The PE ratio, 2 standard deviations above normal. I mean, that's, again, maybe not the best number to be talking about. And it just keeps getting a little crazy. Keeps getting a little crazy. Price to sales ratio, 3. I mean, we're paying, I pulled that up, 3.27, I think it is. We're paying $3 for stock values for every $1 of sales. Think about that. Like that's what that really kind of means. Not only is it like 3 years of sales to cover one to cover the current price. 3 years of sales, but we're talking about three times their sales, and then we're not even talking about taking any costs out. The last time we hit these kind of levels is late 2021, right before a delightful 25% market correction in 2022. Remember? Anybody remember 2022? The drawdown? It just went down and down and down and down and down, and every little rally was met with more down. Everything went down. And meanwhile, in reality land, producer prices, we saw those heating up faster than a microwave burrito, making the Fed rate cuts maybe less likely. We'll see what happens. But who needs a functioning economy when we have the AI hype and the meme stocks, right? Since we're all trapped in this financial funhouse, here's how to keep your sanity and maybe your portfolio a little more intact. International stocks are trading at a more reasonable valuation, but are they going to get hit if the U.S. market goes down? And we're seeing international interest in U.S. stocks pick up this week for the first time in kind of all year. Basically since last August when the Japan carry trade blew out, international investment in the U.S. has just been on a downcline. Finally, we saw that turn a bottom, go above even. But is it too late? Are the prices already elevated? Or is that international investment going to take us on higher? Now, utilities, we saw that actually performing yesterday when I talked about XLU. And consumer staples might not be Instagram worthy, but they're like that reliable friend that shows up when you need help moving. So cash is trash during inflation, but having some dry powder for the inevitable market pullback, and you're like, oh, dang, that's a good deal. That might be a golden ticket. Consider some insurance, small allocations to hedges, small allocations. We're talking about, buy a couple contracts to protect a bigger chunk. If you're not sure how to do that, I mean, you got to be careful. I talk about it, like my IWM play, but maybe September is too close now, or October. Maybe we need to be December, January. It can stay irrational way longer than you can stay solvent, all right? maybe some money bought into shares of inverse ETFs. I mean, it's like car insurance. You hope you don't collect, but you thank yourself when you do. But you got to stay small. This is not a trade. It's insurance. The bottom line, markets can stay irrational way longer than you can stay solvent in this thing, but they're not going to stay irrational forever. All right. That's, irrational way longer than you can stay solvent. When's the end? That's the time is the hardest part of this whole game, at least for me. But it's not going to be forever. We're not going higher forever. We're not going down forever. It's a give and take game. And, usually they don't send out RSVPs for the market correction. So while everybody else plays musical chairs, these overpriced assets, be careful. Maybe find a seat that isn't made of wishful thinking and Federal Reserve fairy dust. Be careful out there, and keep coming back. We'll keep going through ideas. Now, I did ask my AI overlord that helps me kind of create some content to give me some recommendations for high beta stocks. And we haven't really talked about beta, but on the show with Jack that I do, Market Masters, that comes up at 11:30 today, we have been talking about beta and how that beta means a beta of 1 is the S&P 500. The S&P 500's volatility and moves is 1.0. That's the baseline. So anything with a higher beta means it moves bigger than the S&P 500. And I asked my AI to come up with 3 high beta stocks that had good potential upside. And it looked at fundamentals, and it doesn't really have great technical analysis ability, but it pulled up stuff with great fundamental stories and great fundamental reasons. And that's kind of like my best case scenario is when my technical analysis lines up with fundamental analysis. So we'll go through these with great fundamentals first. Now, what does a high beta stock get you with the high volatility? That means credit premium is high. So first off, we have Lam Research, LRCX, with a beta of 1.67, market cap of about 108 billion, and a current price at 760. That's a little rich, right? But there's things we can do. Now, I'll probably make another video and talk more about it, but they have 3 investment catalysts right now that kind of set them up for going higher over the next 3 months. One of those being artificial intelligence semiconductors and advanced packaging and GAA technology, which is gate-all-around transistors. So they design semiconductors, all right? And then memory market recovery, looking to take advantage of the memory market as it comes back. They have significant exposure to memory manufacturing equipment and positioning, and the company's positioned to benefit from that cyclical upturn as more memory is needed in all these AI applications. Now, a second one, KKR, is a beta of 1.88, a market cap of 85 billion, and a current price around 130. We'll take a look at all these in a minute with charts. It's a leading global investment firm with about 664 billion in assets under management, and the company operates across 4 primary businesses. And they're kind of like a private equity heritage thing. They date back all the way to 1976. So they've got some catalysts like the interest rate environment, fundraising momentum, and their credit platform growth. So interesting catalyst there, KKR. And then the third one that my AI picked out was Applied Materials, AMAT, a beta of 1.68, a market cap about 140 billion, and a current price around $200. Again, a little rich, but not unreasonable. Now, Applied Materials is one of the world's largest suppliers of semiconductor manufacturing equipment that's not chip fabs. And the company's products inspire the entire semiconductor manufacturing process from wafer fabrication to packaging and testing with operations across main segments of semiconductor production. So some catalysts over the next 3 months are the China market's normalization, AI infrastructure build out, as always. That seems to be the recurring theme, right? And then memory market recovery, similar to LRCX. And we have this valuation opportunity where the recent stock decline has created an attractive valuation opportunity in the fundamentals of the company. So we'll take a look at these three here in just a minute. And everything's fine, right? Everything's fine. So before we talk about actual investing in charts and stuff like that, all trading involves a substantial risk of loss and past performance. Just because I predict things, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos. You might lose money trading all those things, even treasuries, if you're trading them. And if you desire personal financial advice, hire and consult a financial advisor. That's not what I do. I'm not a fiduciary. I don't tell you what buttons to push. So be careful out there. Looks like the market just opened. So jumping over, taking a look at that. Dun, 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 dun. S&P took a little pullback. Some people hair on fire yesterday. Oh my goodness. Saw some online posts, social media. World is burning down, but we look at this yesterday, 3-day pullback, we're down like 1%. I mean, what are you doing that's a big problem? I mean, we're just, 2 weeks ago, almost 3 weeks ago now, we went down 3%. So, and that was in 2 days. This has been 3 days. Potential to come on down, as I've talked about. We had this potential to come on back down, retest before we go higher. I still believe we're going to go up and tag that 1272. It's kind of a bummer if we don't go up and at least tag that thing right there. Now, that doesn't negate getting a bigger correction. As we dive down through the hourly time frames here, we get closer and closer to current price. The 1 hour support coming up here at 63.70. We did poke down through. We are poking down through the 30-minute support. Came down to it yesterday. Poking below it today. So this is the chart to watch, the 30-minute SPX. If we start on down, probably coming down to the 1 hour. And then you flip up to the 1 hour and watch that one. So that would be down here around 63.60. And we're starting out negative, so we may push down here. Right there. That would be support. And again, if we start below it, start on down here, below 63.40, flip up to the 4 hour. And watch out, because that's all the way down at 61.45. The middle of it right there. So that would be that'd be a little bit bigger pullback right there. We didn't get there 2 weeks ago, 3 weeks ago. So are we going to go for it now? Now look at the price structure of this drop so far. Not very telling. Not very telling. I mean, look how short this looks right now. There was the high, and that's all the drop we've got so far. 1, 2, 3 days. Working on the 4th. There's no trend, there's no pullback. It's just a bleed down. So this looks like a little bit of profit taking, probably, at least for now. Can it develop into something bigger? Yeah, it can. Definitely can. Be careful. Things are way over their skis, but that doesn't mean that the irrational market can't keep going higher. Right there. So, all right. Would you briefly explain? I'm looking at the chat, and I didn't welcome all the channel members: David, Don, Rob, Donald, Terry, Svinborn, Dan, Sergio, Andrew, Scott, B, Craig, Ed, Darren, Diane, Will, David, Aki, Ted, JB, Gary, Suzanne, Craig, Frank, Ted, Gayton. Good to see everybody. I wasn't sharing the screen during my monologue, but I am now. Glad you liked the Genius Act video, B, and hadn't gained much popularity yet, oddly enough. I guess international, I don't know, Google doesn't like it so far. We'll see if it actually starts ramping up. Well, that's good to know, David. Yeah, I am welcoming I'm live. So Suzanne poses the question: would you briefly explain what happens to a stock when it does what GES is doing, a buyout at 16.75? Yeah, let's look at it. So now it's in a buyout, I guess. GES is entered into a take private agreement valued at 1.4 billion. Price is 16.75. Oh, that's a bummer too. I bought shares of this hoping, the upside potential here is massive. And it's kind of a bummer we can't take that higher. What that does, it eliminates short sellers, but whatever the buyout price is, or the take private price, usually we gap up. On buyouts, we usually gap up right below the buyout price, and the price slowly kind of drifts up until the deal's closed. But a take private deal, it may jump right up to that price and just kind of hang out right in that vicinity. And options volumes usually plummet out. Illiquidity kind of ramps up. So as far as a tradable stock goes, there's not much to happen. If your cost was higher than the buyout price, you're kind of SOL. And so out of luck. SOL, so out of luck. And so you got to be careful here. If it's kind of it's not much to do when they announce a buyout like that. So, I mean, we could click on it and see. I guess that on Wednesday it agreed to be taken private. So they've already agreed to the deal. 1.4 billion shareholders will, that's 16.75. So if you could if you have shares and you could sell them for anything more than that, you did better than the deal right there. All right. So if you buy them higher, if you were to buy now and buy higher than that, you're going to get 16.75 when they close the deal. And shares jumped to 16.77. So people paying that are going to lose 2 cents a share right there. Yeah, I did buy shares of this. I think I have a couple thousand shares of this. I don't even remember what I bought it for. Looking for this to actually go higher, but so that's kind of a bummer. I was hoping we ride this pony. I think I bought down here at 9 or 10. So 16, I mean, that's what I make, 60% roughly, but yeah. Is this live? Robert, that's so funny. All right. This is August 20th, 2025, and the market just opened. So looking on down through here. CL. There we go. We're below supports. Still looking down. NQ. Spin that big indicator, right? Go back up there and look at that. That's NASDAQ futures. I was saying that looked pretty negative, and yesterday kind of accelerated that down a bit. So can we find support and turn around? You can watch the low time frames, the 5 minutes. If we can start breaking through it, which we're trying. 15-minute comes into play above us. So if you want to watch the small, Watch the 15-minute here. Then the 30-minute above that. The 4, we're sitting on the 4-hour right there. ES, we still got a ways to go down to the 4-hour. So ES has air in it. NQ may have had the air sucked out of it. We saw some AI stuff getting hit harder than anything else. It's kind of been an interesting pullback. Interesting to me anyway, just from a market internals technical standpoint. This is the red zone on Russell. We poked above it, but we hit our head on the high from back here at the beginning of the year, the very beginning. Russell's been not performing at all compared to everything else. This has been a story of the haves and have-nots in the market. And let me grab a chart I posted in my VIP All Access group. Let's show this off really quickly. Look at this chart. Yeah, this is taking the, this is Bloomberg taking the earnings per share for the Mag 7, which is, Apple, Amazon, Microsoft, Meta, Nvidia, Google, and Tesla. Taking their earnings per share in the blue line, and then taking the 493 other companies in the S&P 500. So you take that Mag 7, $2,200 per share. You take that, the rest of everything, less than $250 a share. That's just stupid, right? Stupid kind of money. And there's ChatGPT hitting the market. Had a little dip and then absolutely ripping. So Russell is not part of the S&P 500, but they're, so when we look at that, it's kind of not great. And if we go look at the RSP, this is the equal weighted version. This is Invesco's equal weighted version of the S&P. I drew a big down arrow on here. We've been hitting our head. We've not been able to break through. Not been able to break through. This can turn into something deeper, even if the Mag 7s go higher. It's been an interesting chart. Now, the top, the blow-off top, we might complete in one of these fib levels up here if this thing brings it on higher. It's just a speculation, maybe. So I keep this on my market dashboard. I have this market dashboard set of tickers over here. RSP is one of those that I watch. Now, if you want to watch something that's kind of indicative that we're going to see a potential bigger correction, move. Set your alert at 100. We get back up here. This is U.S. bond market volatility. This thing can push lower. But when we spike above 100, that's usually when we see the bigger corrections in the market take hold. So set your alert at 100 to know when this thing's going crazy. You can set your alert at 90 and know when we're on the uptrend already. But sometimes we pop up there and just, reject back down. Gold still churning in here. I think we're still likely to go on down, but this doesn't negate the fact, that we have a trade that potentially goes off this afternoon. And if we're getting a rally, we'll probably get into that trade and maybe we can catch a little pop. This may actually be a conclusion of the first move down right here from the high down to the low. We could rally back up to here and still see more downside like that. Have a potential A in place, potential B in place, and 5 waves to make the C. So this could draw out for another couple months before gold starts performing again. Bitcoin. Well, we're in this zone of ambiguity now. To look the best, we need to push on down. We're still maintaining a higher low. It pushed extremes on this. at this point. We are finding kind of a base on the candle bodies. We tagged it this morning. Finding a base there. We have the lows that we pushed down into. And the depth of this thing breaking below the 76 really makes me kind of hope and dream that we push a lower low. Potentially, finish this thing up. Now, it doesn't mean it won't bounce for a day or two and then come down here. So now I'm on red alert caution here. It hasn't really had any kind of pullback. We just drifted down, paused for a couple of days, and drifted down more. Not been very telling. We came down, paused, came down, paused, came down. This might have more to go. $110, $109, and the downtrend highs that we had back here. Thanks, Mike, for being a channel member. Thank you so much. I do appreciate it. It all lights up my screen when somebody does that. So thank you very much. Me and my family do appreciate it. All right, so there you go. And Ethereum, still working on finding the bottom here. Now, the beautiful thing about Ethereum is it did a 3-wave retrace very nicely. Look at this. First move down. Absolutely beautiful correction right to the 1272, where 1.272 times A equals C. And we nailed that right there. Bounced perfectly. And we hit the 15-minute roadmap line and retraced. If we hold the 618 there, that could be indicative of a reversal building. We did tag the 50% retrace already, but that looks like A, B, C. We could come down just a little lower. That 4140, 4130 zone. If we do that in turn, break back above that 4240 high that we had, early this morning? Let's see, when was that? Yeah, 4:30 this morning. If we can break back above that, I'm actually going to put an alert there. And change the... So the real tell, if it does break above that, the next sign would be continuation above 43.75. Get up to 44.21. So we want to see that extend up here before we get a pullback, and it could go even higher, but I want to see it extended there and then get continuation like this, and then we would have a potential impulsive move in place, something like this. Then we may see another pullback to this vicinity before wave 2, the higher degree. I can't drop there, but that'd be like a 1. This would be a 2, and then we could get the potential bigger move up to go break through the red zone where we rejected off of right here. This was the danger zone. I drew it on the chart before we got there, and we turned down off of it. So we need to gather some strength to bust through it. Otherwise, that could be the top. What this is telling us, the reason it's a red zone is that could be the top. And this could all be part of a bigger correction that took hold back in 2022. And we could go lower than that low right over here. Because this is a big 1, 2, 3 up right to the resistance point. And that could take it down. So this could all be part of an A, B, absolutely beautiful correction. Oops, see right there. So be careful. Be Careful, be careful, be careful. Look at global liquidity. That's what I look at for the Japanese stock market here. This is taking a little bit of a pause. We're coming back. So we need to stay above this breakout to go higher, but the way we ground up here, does it have enough energy? Are we going to have to take a trip back down to the box yet again? See, we came up just shy of it and then returned to the box. Now we broke out. Do we have the energy to stay up here and go higher? I don't know. I didn't really want to see it stall out like this. So that does give me it is a cautionary bit right there that we couldn't get on away from this area. Look for examples before, right here. See, we got much further away before we came back and tested it, and then we ripped from there. And this one has kind of a double peak here. The second one a little more enthusiastic before we did that big liquidation event last August right there. So breaking out, I want to see this get higher before we retest it and go even higher. As global liquidity increases, high risk assets, risk on, risk off stuff, these indexes, this guy, stand to benefit the most. So can we do that? Can we get that moving higher? Dollar index still set to go lower. Despite pushing up a little bit today, we have this A, B, C setup for at least a visit down here in the 9670, 9710 area. And if we get a little more, we'll retest this downtrend of highs and downtrend of lows. It's been a support resistance trend line. See, it was a downtrend of highs, then it turned downtrend of lows. And we might go test that area one more time. Now, if we slice through it, we could come down here to 90 and potentially wrap up this whole big correction that the dollar's been in since the high back here in 2022, when the market kind of bottomed out in 2022. And once we bottom out, we may be able to take the dollar back higher, 130, 135 area. So look at the Mag 7s today. Where's the Genius Act video? On the videos page of the channel. It was available for channel members since Saturday. I don't know. One of those days. Apple looks like we're going to push on down. We've got this ABC correction potential. I've talked about it every day for, seems like 6 months now. Amazon also has a potential to go down. That was a lower high. That's a cautionary setup. We could see a bigger market flush out take place if Apple's going to go down and Amazon's going to go down. Google could also go down. Doesn't have an immediate downside setup yet. We came up, tried to fill the gap, rejecting. Coming back to the roadmap line would be the first support on all of these. Watch that roadmap line. You don't know what the roadmap line is, go watch the video pinned to the channel homepage, or you can click the link in the chat. $5 if you want the easy button. I give you the code for free if you just go watch the video pinned to the homepage on the channel. Meta also dropping back below the breakouts. Cautionary tail here. This might take a trip back down to the roadmap line before we can bounce. Microsoft. Hey, Kimberly. Good to see you. Microsoft. Pushing back down. As I said, we may retest some of these fib lines or even the breakouts. And the roadmap line is coming up to the breakout level. So we can see things flush out a little more aggressively on Microsoft and come down back down in this 460, 470 zone right in here. So if things keep escalating a little bit on the pullback, back to that breakout level. Retest it. Common action there. Common price action. NVIDIA, as I talked about yesterday, we may come back down to some of these fibs or even the breakouts. This orange zone, if we can hold it, and the roadmap line not that far away right there yet again. So Tesla, oh, that's not what I am. So coming back down, roadmap line supports 270, the target down there and below that. I actually want to see this actually finally hit this level down here, 270. That would finally clean up all this like gunk it's been doing. With the first move down, a retrace that's been sloppy as AF, and then final little move down here in this 265, 270 zone. If we do that, it sets up a clean move higher. You know, right now it's been pretty mucky right there. So Rongamer might get your chance if you hadn't bought back yet. Netflix, found resistance at the bottom of the upright. Didn't hit the ideal 618. C wave down, put it right down here. Roadmap line. Absolutely beautiful correction potential. So that may have been the top. That pushes the target just slightly lower for Netflix, somewhere down here around 123, 167 for the next move down. Even if the market goes higher, we may see Netflix push on down here. And I put Netflix in the list here because it was a original FANG stock. So there you go. PANW. I go pull all the gainers. Things that were moving $2 or more up in the pre-market, put them on the gainers list. Things are moving down $2 or more and put them on the decliners list. And that doesn't look like the right list to me. 1, 2, 3, 4, 5. Yeah, let me see. Click save, reload. Let's see. It pulls a different list. There we go. Yeah, different list. Didn't sync. So gainers, ASML. Not looking strong yet. Not looking strong yet. If we can break above that 618 right there of 770, we can see some further upside. 852, 874, possibly extend this on up here around 950. ADI, nice bounce potential. Lowe's, riding with Home Depot. We had the earnings today on Lowe's, and they beat. You know, yesterday Home Depot didn't beat. You know, they missed on the top, missed on the bottom, and still ran higher because of guidance. But then Lowe's today beating on the top and beating on the bottom, popping higher, but giving it back a little bit as we have some market weakness as we open here. So we talked about just, you know, circling back, KKR, looking at the bigger picture here, move down, the retrace, if we can hold that roadmap line right there on this retrace, that sets up the bigger upside potential for KKR. Then LRCX, Lam Research. That looks like we're going to break on out. I mean, it's got the setup moving higher. And then pulling a blank on my final stock there. I was reading it live. AMAT. So that one did a big first move down, did a retrace to the 618. This might have another trip down to go before we actually find a bottom. So I would be cautious on this one because we have the potential setup in place for this to be the A wave down, the B wave retrace, and the C wave down to take us below 100 on that one. If you're not familiar with what the devil I'm talking about, how I come up with these ABCs, it's Elliott wave theory. You can say it's full of bunk, full of crap, full of whatever. I make a lot of money doing it. There's some nuance and stuff to it that you don't just pick up when you read the books. You don't just pick up when you read somebody's webpage on here's Elliott wave simplified. Now, there's two main patterns I look for. One of them being the measured bounce, which you have a trend coming down, you have a retrace, you find resistance at the uprights, most ideally the 618. This is the ideal spot, the 618 right there in the middle. And then you get continuation of this trend pullback continuation. The proportions, when it's corrective, usually A equals C, that's where we get the 100, or 1.272 times A equals C, and that's where we get this. Now, if this was going to be an impulsive move, which, funny enough, this setup looks the same way, whether it's impulsive, which is a trending move, or corrective, which is a counter trend move. Same setup, but the difference here is that usually this move, this is the first move, second move, this third move will get down to this kind of level or further. Now, what's the commonality between both patterns? This zone gets hit on both patterns. Now, sometimes we come up shy right there on a correction. So it could come up short, but a lower low, a move past the first move is what kind of completes the pattern potentially. Now, B wave, getting in nuance, B waves can exceed the start point, but if this is a wave 2, it cannot. So that does get into a little bit of the nuance. That's why I look for these all the time. This is one of the patterns I look for. Now, the statistics on this one working out, not so great. I don't have a way to filter. I haven't figured out the filter to find the higher probability ones of these. Now, the other pattern I follow, which I have 6 of them set up down here, and this is not a great example on that one. This one is much better. It's a market roadmap bounce right here. And this, as I was talking about my roadmap line a minute ago, price coming down, bouncing off of this, and then getting continuation. What we do, we grab the high, we grab the low with the fib line. We look for the close, and this works on all time frames. The close above the 618 sets up a 74.8%. 0.8% likely target right here. And that's 90% of the way to the 1272, which is 70% likely to get hit, or 70.5 or something like that. So basically, 75% likely to hit the 1.1448, which is 90% of the way to the 1272, which is 70% likely to get hit. To me, that's a high probability price pattern that occurs over and over and over in the market. And I've tested this tens of thousands of times across all time frames. Maybe 50,000 times. So this is another Elliott wave pattern. Now, you notice when we bounce right here, you come down, you come up to that 618. If we were to turn down there, that's the measured bounce pattern. When we come up here, that's a continuation pattern. The pullback was complete here. So they are interrelated. And that close above the 618 tips the odds from it being a continuation lower to a move higher with 75% likelihood. All right, when people talk about a high probability pattern, most people don't put any numbers to it. I put numbers to it. I put a lot of numbers to it on all time frames. It works all time frames, kind of the same. So I spent a lot of years trying to put numbers to it. Now another one set up with the same kind of potential here. I don't like this though because the trend is down clearly, and then this, we would be looking at kind of a counter trend trade here. It did just barely close above that 618, but the roadmap line's right there too, and that doesn't look nearly as clean. It doesn't look like this is the uptrend, that's the correction, and this would be the continuation. So that one not very clean. And I was saying I didn't care for this one either. It triggered an anomaly in my finder. This little price action below the roadmap line here made it look for only this price action right here. The majority of that price action is below the roadmap line. That doesn't say bullishness to me. We closed above the 618 right there. We could potentially complete this pattern to 504 and then still get continuation lower. But this looks like it's part of a bigger downtrend on Berkshire Hathaway. PLD, another one set up with a pattern, but this has obviously been a downtrend with lower highs coming all the way through here. That does give me caution. Trend lines are the weakest form of technical analysis, so be careful relying on those. But we have this high, we have this low, we have the bounce, closed above, potential to 115, and we don't have to hit the trend line. So this could play out inside here and still go lower. So that could be a short-term little pop and work out. I do have, like, hey, can you pull up statistics? So this one right here, 32, that's a statistical population for this particular stock. You don't have to look at the bigger population. 65% profitable trades. That's below the average. Remember I said 74.8% is the average across tens of thousands. So this is below average. And then a profit factor 1.4. The average profit factor is like 1.28 across all time frames and tickers. So this is also running a little light. Maybe you don't want to take this one. You're like, what about the others? This one didn't actually trigger the entry for my algorithm on here. I have a little tighter filtering on TradingView than I do in Python where I run these. But this one, look at that. 35 trades in the history, 71, a little lighter. That's a negative profit factor. That means Berkshire Hathaway doesn't tend to trend and make big money. As a trend pullback continuation pattern, Berkshire Hathaway tends to not trend. And just in case you don't know what profit factor is, it's the gross profits divided by gross losses. So you make $1, right? You make 938 bucks, but to make 938 bucks, you lost 1,000. It's like, ooh, wait a minute. You lost more than you gained. Below 1, that's a negative profit factor. Looking at PLT or PLNT, I was actually really bullish on this back last year. Yeah, look at that move. I grabbed it back here. I think I sold out right here. Beautiful potential though. There's the target up here. Zoom back up at the current. So the last one worked out. Even though it got to retrace the trigger right there, there's the target. And funny enough, it retraced right after hitting the target. A lot of times we see that. That's why I went with the 1448 as the target. So here's the pullback, here's the entry. There's the entry right there. Close above the 618. Continuation 117.02. Stop. And you're like, what is the stop on all these? Dollar below the low. Always a dollar below the low. Why a dollar below the low? It worked. All time frames, all everything. Easy to do. Let's take the low, go a dollar below. That's your stop. So there you go. 97.79 minus a dollar, 96.79. And there's the target. Look at the statistics. 8 is not a statistical population. Gotta have 30. And so these numbers don't mean anything. You fall back on the average, 74.8 and 1.28. If you wanted to trade that one, if you're like, I'm not feeling good about these, don't trade it. Simple as that. Stag. And I'm not too fond of this downtrend, but that did set up the entry here. It did potentially kick that for a 37.88 target right there. Now it didn't trigger my, like I said, I have more aggressive filtering on the TradingView indicator. Part of the reason it's not in it is because it's still in this one back here. It won't take two at the same time. That one did stop out right there. This does not have meaningful statistics. Yeah, we did pull back. We broke above, came up, prior high. So the bigger upside target 38.99, but the smaller upside target 37.88 on the smaller inside bounce right there. And that's the pattern. If you're like, well, how does this work on like SPY, especially on like smaller time frames? That one stopped out, obviously, but just in the last year, we have 65 trades, 61% profitable. But if we go to entire history, this will take a second. Computer says, come on. There you go, 73.7%. So SPY running just below 74.8, 1,200 trades. That's a bunch. And break even on this one. So SPY in a 5-minute, probably not the best. And that's why I don't run SPY in a 5-minute for any services. Now, if you run triple threat, SPY in a 1-minute, got to update the report. Computer says updating, updating, updating. There we go. This does ebb and flow a little bit. 4,946 trades, 83.5% profitable, and a profit factor of 1.1. So that's why triple threat runs on a 1-minute time frame. Fascinating, right? So the average across all time frames, bajillions of trades, comes out to be 74.8%, 0.8%, and a profit factor of 1.2. When you average tens of thousands, this is 5,000 trades right there. So hopefully everybody sees the power of this. How do you get the algorithm? You don't. I don't sell the actual algorithm. I sell alerts from it, but I don't sell the actual algorithm. So there you go. Yeah, Berkshire Hathaway was $12.75 a share when you graduate from high school. BRK.B. Let's go look at it. $12.75. Must be a split in there or something. Or you're talking about BRK.A. Thinking about Berg A. That was in 1984. That was a wee little shot back then. Yeah, there's Berk A and Berk B. Yeah, see, 1984. That's what I said. 1984, right there. You're talking about Class A shares, which are redonkulous right now. $737,000 per share. You know, most people trade Berk B because it's more attainable at $490 a share. Yeah, should have bought one. should have bought $10,000 worth, right? Shoulda, coulda, woulda. Anyway, let's talk about bias for the day, and we can wrap this puppy up. So, what do you say? I gotta get ready for the morning, the Market Masters show. Market Masters coming up at 11:30. ProsperityPub.com/Market Masters. Link will be in Discord. So this thing's escalating. We're down to the 1 hour already. All the things I said coming true quickly. 4 hour. Right down here. This thing can escalate. Right down to the 4 hour. So it's kind of the next. If we don't bounce in the next little bit here, which that doesn't look like we're finding much support here, we can escalate it right on down. And the scary thing is the daily chart's on down here at 6,000. If we get below the 4 hour, there's the daily. And you're like, well, what about below that? Below that, we run the low to the high. And the support below the daily comes into the uprights. Same stuff. Here's the uprights. We'd be looking for a move down here. And that's right where the 3-day is. Right there. Weekly chart, where we visited back in April, is on down still at 5,200. It just builds and builds and builds. And look, we bounced right off of the weekly. So that'd be the escalation. And this would be the escalation. And then continuation would be down here below 4,000. There you go. Be careful out there. It's not staying wrong. Have a plan. Have an exit plan. Even if you're wrong, have an exit plan. Don't double down. You know, it's not being wrong that costs you big money. It's staying wrong in the markets. Be careful. Nobody's watching out for your account more than you. We'll see you again tomorrow. Come hang out with me on Market Masters, 11:30. Bye, everybody. See you later.